I turned on the screens this morning with the idea to talk a little bit about this quarter in review. And not only do I want to talk about that, but there are some things happening this week that really are just kind of coming to fruition in terms of what we were expecting for the month of March. I'm going to end on that, but let's start right here. So quarterly, what has happened with the markets? I'm going to start with the S&P. And I've got basically a chart on the screen. I'm going to have several charts on the screen, and I'm going to talk about high, low, last for Q1. SPY year-to-date highs came in at 613.23. That all started happening around about a month ago. We hit the all-time highs in the stock market, roughly. The lows, the all-time highs, yeah, they were all-time highs, but the quarterly highs were near the end of February. Quarterly lows were just a week and a half ago at 549.68. S&P's down over 4% for the month so far coming into this morning. Bonds. Well, there was one place you could take your money, as bonds have really had this higher low, higher high scenario going on, with the low coming in around January 14th. The highs we came off of right at the beginning of March at 92.79. Currently where we are right now, which is 90.70. This was Friday's close, up 3.11% for the quarter. Okay, money went into bonds. How about oil? You know, we always have an oil pattern that starts mid-February. Well, it's getting off to a slow start because oil's year-to-date high was 84.58. That happened in mid-January. The low at 70.09. That was about 3 weeks ago. Currently 73.79. Oil's down 3.7%. So I still like oil, by the way. I think it's getting off to a slow start, but I think it's going to come around. All right. Gold, GLD. The high was just 2 days ago, 281.48. That's for the year. Lows were all the way back, literally the third trading day of January, 242.05. Currently 278.49. Gold's up over 14% so far this year. So far, it also looks like the big winner of the bunch. Let's continue on. Take a look at Bitcoin. Bitcoin, or what we like to refer to as digital gold. It's been digital dirt so far this year, with the all-time high and, of course, the year-to-date high back in January. In fact, I believe this high came on Inauguration Day, 109.340. Low was 76.582. That was 2 weeks ago. This, as of Friday, 85.6. As of this morning, 88. Currently down about 10% as of Friday. Obviously, now that has changed. We've hit single digits. Here's some results I want to share with you, as well as where we see things going into Q2. First of all, stocks, oil, and Bitcoin are down. Tech really leading the drop there. Bonds are up about 3%. Traders flocking the risk off. Gold up 14%. Clear winner for the quarter. 2 points I want to make. Anyone who doesn't own gold has really missed the quarter, which also means if you haven't been listening to us for the last 3 months, then either you don't own gold, maybe you do. We own gold. We own gold. We've talked about it. We actually have it in the Money Calendar publication. It's one of our winners, one of our many winners for Q1. Check it out, folks. If you haven't checked it out, our Money Calendar Pro, we've been killing it. In fact, with the markets down, with stock market down 4%, with commodities in general, and I'm taking gold out of it, down 4%, we are running right now about a 90% win rate. Not 90% historical, but 90% published win rate for the quarter. We're out of the gate and killing it. I believe up about 185% for the quarter, and clear profits. Gold was one of those many trades that we have going on. And if you don't own gold, then you've missed a lot of the money. But here's the thing I want to tell you, right? Here's the big thing I want to tell you. Everything we're seeing says the bull market is starting right now, because I believe you're going to see earnings, which are going to, they've already lowered the bar. So anything we jump over is going to be good for the stock market. I also believe that now that the Trump administration is now out of the gate for the quarter, maybe they'll slow down. And I expect that. If you look at patterns from 2017, started out pretty strong then. Then came a lot of blockage from the other side. It slowed things down. That was actually good for the stock market. I believe that's going to happen here as well. But aside from those patterns, I've got some patterns right now, including seasonal patterns, which are telling me the bull starts now.